XRP might quietly vanish from crypto exchanges, without warning and without anyone noticing, until it's too late. Billions are being drained behind the scenes, and the countdown to a full-blown supply shock has already begun. By the time the headlines hit, the door could be closed for good. This isn't just another price prediction, it's a warning. I am Artificial Alina, and you are watching AlinaX. Let's dive deep. You might not believe how quickly XRP could disappear from your favorite crypto exchange. The surprising part? Most people won't even realize it's happening until the supply's almost gone. Imagine this. It's a quiet Sunday evening. You're casually scrolling through crypto charts, maybe sipping something cold and planning for the week ahead. Suddenly, you check the XRP chart and remember the thrilling spike back in mid-January when it soared past $3. The excitement was palpable, like discovering a hidden level in an old-school video game. But since then, the energy seems to have waned. Prices hover around $2, leaving the community divided. Some believe it's just a temporary dip, while others wonder if the party's over. However, before you dismiss XRP entirely, consider this. Arduino Fina from Alpha Lions Academy predicts an incoming supply shock, not just a mild shortage, but a complete sold-out scenario by 2030. That's only 5 years away, a blink of an eye in the grand scheme of things. To understand this looming scenario, let's break it down in relatable terms. Imagine walking into your favorite sneaker store on launch day. Instead of finding shelves packed with the latest releases, there's only one tiny pair left, and the cashier informs you that everything else is sold out. No one's reselling because everyone wants to keep their pair. In crypto terms, this is a supply shock. When the availability of a token dries up, even a small spike in demand can cause prices to skyrocket as buyers scramble to grab what's left. Now you might think, haven't we seen this story before? And yes, we have, with Bitcoin. When Bitcoin ETFs entered the market, they acted like vacuum cleaners, sucking up every available Satoshi. Miners couldn't replenish the supply fast enough because of Bitcoin's capped inflation. The same principle applies to XRP, but with a twist. No new XRP coins are being minted, and every transaction burns a small amount of the existing supply. Imagine throwing tiny scraps of dollar bills onto a bonfire each time you send money. Over time, those tiny losses add up to a significant reduction in supply. Data supports this trend. According to CryptoQuant, Binance's XRP reserves have dwindled from 2.94 billion coins at the start of the year to 2.86 billion today. That's 82 million coins gone in a few short months. While that might seem like a small percentage, consider the analogy of a dripping faucet. One drop won't flood your bathroom, but let it drip for weeks, and you'll find yourself wading through water. Back in January, when XRP hit a 7-year high of 330, Binance's reserves briefly spiked above 3 billion coins as traders rushed to sell. Since then, reserves have steadily declined, losing 183 million coins. If this pace continues, Binance's inventory could dip below 2 billion coins within a few years. Now multiply this trend across all exchanges, and Fina's warning of a 2030 supply crunch starts to feel less like speculation and more like a ticking clock. Scarce supply leads to thin liquidity, which means even a modest market order could cause massive price swings. Picture a sumo wrestler hopping onto a seesaw with a toddler. The imbalance creates wild, unpredictable movements, the same dynamic we see with thinly traded assets. Early Bitcoin traders witnessed this firsthand when a $10,000 buy order could send prices soaring. But supply shock alone isn't enough. Demand plays an equally crucial role, and demand thrives on narrative. So, what's the current narrative for XRP? It boils down to 3 key factors: utility, clarity, and scarcity. XRP's utility in cross-border payments remains a significant draw as institutions crave efficient and cost-effective solutions. The clarity surrounding XRP's legal status has improved thanks to progress in the ongoing lawsuit. And of course, the growing scarcity of XRP adds to its appeal. The possibility of an XRP ETF adds another layer of intrigue. If a major financial institution or asset manager files for an ETF or the SEC approves one, it could trigger a buying frenzy. Traders would treat it like the starting gun of a race, rushing to secure their positions. Combine this with the ongoing burn mechanism, where every transaction destroys a tiny fraction of XRP, and the supply dwindles even further. Over time, billions of transactions can shred a substantial chunk of the total supply, creating upward pressure on prices. Personal stories often drive home the point. Take my friend Mike, for example. Back when XRP was trading below $1, he insisted on waiting for it to drop to 50 cents before buying. Spoiler alert, it never did. Now, he recounts his missed opportunity at every barbecue, like a cautionary tale. The lesson? Markets rarely offer perfect setups. They move quickly, often when you're not paying attention. So, how should you approach this? First, avoid chasing green candles with money you can't afford to lose. Second, understand that long-term catalysts like the predicted 2030 supply crunch take time to unfold. Third, consider joining communities where you can discuss these trends and strategies. Engaging with like-minded individuals can help you navigate the complexities of the crypto market. Another factor accelerating the supply crunch is the growing popularity of self-custody. As more investors move their XRP holdings off exchanges and into hardware wallets, the available supply on exchanges decreases. This trend makes the market even more susceptible to price spikes during periods of high demand. For those considering self-custody, hardware wallets like Ledger provide an added layer of security and a sense of true ownership. Partnerships also play a pivotal role in XRP's trajectory. If Ripple secures deals with major banks or financial institutions in regions like Asia or the Middle East, transactional volume could skyrocket. Increased volume leads to more transaction burns, accelerating the supply depletion. Regulatory clarity in key markets adds to this momentum, positioning XRP as a legitimate tool for cross-border payments rather than a speculative asset. However, there are potential obstacles. Derivatives and synthetic products like futures and options could dampen the immediate impact of a supply shock by allowing investors to gain exposure without owning the underlying asset. While these products may delay the effects of a supply crunch, history shows that real-world settlement eventually drains liquidity. Think back to the gold market, where paper claims eventually gave way to demand for physical bullion. Looking ahead, some analysts predict XRP could trade in a range of $33 to $50 if bullish factors align. While this might sound far-fetched, remember that markets have a way of surpassing expectations. In early 2017, few would have believed Ethereum could top $4,000 in the next cycle, yet it did. The same potential exists for XRP, especially as we approach 2030. Fast forward to the late 2020s, and imagine headlines announcing that exchanges are pausing XRP deposits due to a liquidity shortage. Social media would erupt, and even skeptics might start knocking on your door, asking about that Ripple thing you mentioned years ago. Those who held on to their XRP in cold storage would find themselves in a position of advantage. Of course, no outcome is guaranteed. Regulatory changes could pose challenges, Ripple's ODL product might face competition from CBDCs, or retail interest could shift to the next big trend. However, the potential rewards outweigh the risks for those with patience and a clear strategy. At worst, XRP could stagnate, testing your resolve. At best, a supply shock could propel prices upward, rewarding those who stayed the course. In the end, knowledge is your best investment. Understanding these dynamics equips you to make informed decisions and adapt to market changes. Whether XRP's journey takes it to the moon or tests your patience, staying informed ensures you're prepared for whatever comes next. Thank you so much for watching. If you found this breakdown as eye-opening as I did, smash that thumbs up right now. Don't miss out on our exclusive, never-before-seen insights. Subscribe immediately to join our inner circle at AlinaX and stay ahead with every breaking update. I want to hear your thoughts, questions, and theories, so drop a comment below. Every single one will be read and replied to. Act fast, be part of this revolution, and let's redefine the future together.